Hello, 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 everyone. Good afternoon. Mike Arnold here, co-founder, Path Trading Partners with Bob Gino. Thank you all for being here. If you are new, please do consider subscribing, ringing that bell, and hitting the like button. So, Bob should be on in a bit. Let's see. Hey, Patrick. Hey, ho, waka waka. I hope comments are still working. Please don't break again. Can somebody else type in something new? Let's see. There we go. Hello, Options 22. Good afternoon, Royal Palms. Waka thinks massive offloading will happen tomorrow. Tesla is messing with you, huh? Softening the key support levels. Yes, they have been softened quite a bit. I will see if we can get to that. I am on a very tight schedule today also, so we'll see if I can stick around, but this afternoon's a mess. Hit the like. Yes, hit the like. Thank you, Chris. Good evening, Charles. All right, let's just get straight into it since I don't have a lot of time today. After the open, we had industrial production missing. Capacity utilization down. Then we had business inventories missing. Then that was about it. Tomorrow, let me just get into tomorrow. It is quad witching. Technically, we should go back to triple witching, but we're keeping the name quad witching. 3.6 trillion OPEX tomorrow, biggest OPEX of the entire year. If I could take off 4 trading days of the year, which I guess I could, but just completely disappear, it would be the 4 OPEX. Why? Because reliable patterns test out unreliably tomorrow. It's the 4 times that I can literally say it's a crapshoot. More so. Now, if you get momentum day, that continues, but you can get these weird reversals. You can get stuff depending on dealer hedging and how it goes in and whether it's in positive or negative gamma, where the gamma walls are. It can just mess with you. So, just take that for what it's worth. If I could disappear 4 trading days of the year, there would be the 4 quad witching. So the big OPEX from every quarter. Tomorrow being one of them. We have tomorrow. The only thing besides quad witching is the composite PMI flash, manufacturing and services flash, 15 minutes after the open. That is it. And then it's all down to where we sit. We are in negative gamma territory, which we tipped into yesterday, and with the momentum selling off the open, continued in negative gamma territory. So dealer hedging was again going in the direction of the short-term momentum, which was lower today. So you had dealers selling into the already declining market. And we tested the key levels, which we'll look at in a second. By the way, on the spiders, it did trigger the double top. Here's your market map. And besides the little green Tesla box, which is only at 56 basis points, and you had a little green Verizon box. I always want to call this PBR instead of Petroleo Brassel. I can't even say it. I always want to call it Pabst Blue Ribbon. Pabst Blue Ribbon was up. You know, that's just me, though. Oh, you got a little Allstate there. Look at Allstate. 184 basis points, but pretty red on the day. Pretty red on the day. We have no sectors were positive with comm services, and which remember when we had this sort of the crap aspect of the rally, we had comm services up pretty big leading. Now that's turning around into dump mode. But so far this week, everything, besides utilities, is up like 25 basis points and energy up 19 basis points. even over the last month. Ugh, wow. Fed watch tool for Feb, 75 basis points, or 75% for 25 basis points. Fear and greed index. Come on. Don't fail me now, fear and greed. Is that correct? We can't still be in greed with today, but I'll have to double check that. All right, after the close, Adobe, which did gap up after the sell-off today, missing on revenue, beating on EPS. I was actually surprised on the gap up. That's about it. Really not much tomorrow morning. All right. Look at the closing now below the 50, but not below the 39.11.25. But the lowest close, I'll bring on Bob in a second. He's waiting patiently in the green room. This is now the lowest close since CPI Thursday. This is structurally breaking key support on a closing basis, but not breaking the prior resistance, becoming support little area on the closing basis or on the low basis. It bounced off this key area. Cycles at the top rolling over on the daily, and remember, on the weekly, still heading down. So we could easily see much more downside. My next key target, not necessarily for tomorrow, but about 38.40. With that, the one you've all been waiting to see, Bob Iacino.
What's up, guys?
How you going? Let's see if comments are still working or if I got to try to bring up another browser. They've been breaking for some reason. I did an update. It was a required update, and now the comments keep breaking.
Oh, those damn required updates.
You know, all right. They were working for a while. Could somebody try to type in a comment to see if we got anything going? Otherwise, while I let Bob talk, we will bring up a browser window. And I'm not seeing anything right now. So what are your take? We had retail sales out today, which I thought was pretty crappy. Anything else on your radar screen going into tomorrow's big quad witching? Also, we had ECB and BOE. ECB, their presser sounded very, very hawkish to me. I want your take, though.
Christine Lagarde wins for most hawkish central banker. I mean, she even differentiated from the Fed, right? I mean, she basically said things specifically pointed at the Fed. For example, if you were to compare us to the Fed, we have more ground to cover, we have longer to go. And that is the reason why we have very specifically added messages in our monetary policy statement to reflect that fact. This is not a pivot. We are in for the long game. She was very aggressive in terms of what the ECB was going to do and what was willing to do, which brings me to the whole conversation. I just did a BNN Bloomberg interview. Maybe I don't even know if we can do that. I'll have a link. I won't have an actual clip, but I could probably pirate it for us. I don't even know if we can do that. Say that again?
No, that was just me. I had to pull up the YouTube channel. So now I'm watching my own YouTube channel for the comments. See, okay, they're not frozen in the all right.
So lost my train of thought.
The train
what was
derailed.
I saying, Mike?
I was trying to focus on pausing the sound on the YouTube channel.
I remember. So I just said this in a Bloomberg interview that I just did. I literally got off the Bloomberg interview. That's why I have a collared shirt on, which I absolutely despise. I told them that to me, there's only three possible outcomes of and I'm talking specifically about the U.S. Central Bank, but it probably applies to the ECB as well. But let's talk about it from a perspective of the Fed and the FOMC. Three possible outcomes: strong economy, lower inflation. Not happening. Strong economy, the Fed wins over inflation. Unlikely with the strong economy. Excuse me. Possible, but unlikely. That's the soft landing. And then the third one is weak economy, weaker inflation. But then the worst one is weak economy, still strong inflation. The last two are we at least have a period of stagflation, or we are in stagflation. Those are very negative effects. I was in a very large Twitter space, and they were trying to get me up on the stage, but we were having technical difficulties, where one of the people who has a huge following, I'm not going to say his name because he's not here to defend himself, basically said that we are in a period where prices are falling at an increasing rate, when the exact opposite is true. Prices are rising at a decreasing rate. They are not falling at an increasing rate. And that is the major misunderstanding of people with CPI. Because both CPI and PCE showed higher inflation, just a smaller higher inflation, a smaller increase in the cost of goods. So it's literally, this guy's talking to somewhere in the range of 1,150 people. And he's saying something that is patently false. And not only is it false, the reverse is actually true. And then they were talking about how it just doesn't make sense how the market reacted to it. And I wanted to get in there and be like, that's because you're reading it wrong. You're reading the actual data incorrectly. You're reading something that says the sun is rising when the sun is actually setting, or vice versa. So that's the problem with inflation and the way that it's reported, because it's reported as a rate of change. And it's reported assuming that people understand what rate of change means, and they don't. Not en masse anyway. So I'm excited to see the S&P PMIs because they're flash December tomorrow. It'll be interesting to see if there's any improvement in that. And we're getting it in the UK, the EU, Germany, and the US. And I always separate Germany and the EU because Germany is the engine of the EU. So if you see a divergence there, it could be kind of like seeing divergence in the charts where one is going to correct or the other is going to correct. So yeah, that's honestly most of what I have. Now, if we talk more in depth about the Fed or talk more in depth about the ECB, they, at least in their verbiage, are not swaying from what they say they're going to do. You look at the back end of the rate curve, they're still pricing in rate cuts, still pricing them in. So there's a divergence where something has to give.
Okay. Wow. I don't know what to say anymore. Bob.
Questions?
Yeah. Why? George. Bob, this quarter's still green?
Do I? What?
Is the quarter still going to be green?
Is that Coco?
No, it's George.
Yeah, I'm not. It's a long way from being red, George. So I'm going to go ahead and say yes.
People literally live day to day.
I know, and I don't know why you guys do that, man. Do you guys like? I love Georgie Porgy. He's actually a Bob Iacchino favorite. But you guys, man, it's just another day. I've said over and over again, and I'll say this so Mike doesn't have to again, that I bought at the beginning of October. Look at where the market was at the beginning of October. Just put up a monthly.
Yeah, I got it right here. It was, when did you buy? I need the exact time, Bob.
You guys already know the exact price, $36.40. Hey, where are we?
We're at $39.22.
Almost 300 S&P points away from where I bought. It's a long way before the quarter turns negative. And how many days are there left in the quarter as of right now? 15?
Well, that's total, roughly total
That's
days.
Calendar days.
Yeah, you take out those days.
Yes, I'm going to say yes, George. But again, you guys know my stop is at break even. I'm not trailing it right now, so it's at break even.
Yeah. I mean, I can understand living day to day for day traders, yeah. But then for position or swing traders, it's literally, does stuff flip every day? No. If you're flipping every day as a position trader, you're not a position trader.
Yeah, correct.
Even a swing trader, yeah, you can switch more quickly, but you're not switching every day. You're not a swing trader then.
Right.
So,
Every bit of news, in my opinion, other than tomorrow's PMIs, which are the smaller PMIs, they're not the big ones, is out of the way for the U.S. equities till until the end of the year. Basically, every big piece of news.
yeah,
Now the retail sales, fear and greed switched to neutral. Link.
did it?
It updated. Yeah.
Okay. Back to neutral, we have the spiders triggering a double top. I haven't even looked at the next 7 days. I mean, I'll just be glad when tomorrow's op X is out of the way. You see here, I mean, we're closing back below the 50. Closing
Yeah.
back below the 50, still barely holding support. It's going to get interesting now, as I didn't know if you were on here when I said this, but with all the testing I've done with pretty much across the board, whether they be my systems or not, quad witching
Yeah.
day is the worst day for like holding up systematically because the
Yeah.
probabilities just go haywire. It's like you could have, I've seen 70% stuff, and if you just test it on quad witching days, it's like 10%. It's like, forget it.
Yeah.
It's just a horrible day. By the way, here's something else. I don't know if you follow Sergey uh Perfilev. I probably butchered his name, but he does a lot. He's a really technical guy. Does a fantastic. He just puts out great YouTube videos too. He did some stuff
Yeah.
with the Santa rally starting from uh Monday. If
Yeah.
you just keep Monday through the end of the year, and
Mm-hmm.
he's a hardcore stack guy. Like,
Okay.
so here's the way. Can you see this, Bob?
Yeah, I can see it.
So you got the up years and the down years. It's literally, this is through the end of the year. Just he's just releasing some stats. Positive 27 out of 42 years, 64% of the time. The average rally
Yeah.
was 181 basis points. It was negative 15 out of 42 years, which is 36% of the time. The average sell-off was uh, 98 basis points down. So it's got, for the last 2 weeks of the year, it's got an upward bias just in the
Mm-hmm.
testing. So, you do have some pretty, if it's a down, it's generally down pretty decently.
Yeah.
But now if you take in the January effect through the first week of January, so this is through January
Mm-hmm.
7th. I just thought this stuff was interesting. I thought I'd share it with people. You have it. Let's see, where are those numbers? But it's increasingly more positive if you do carry it. Although look in recession years, it was just like official recession years, except for the ones that he doesn't have on here for COVID. When it missed, it got blistered,
And I
especially
want to
with.
point something out on just this chart, Mikey. Mike and I have talked repeatedly about how stocks can go up during a recession, generally in the second half of it. Look where the brown line is on the two larger recessions. And even on the one prior, I can't read the years, the one prior to the most recent one, it was just before the recession began. So there's an example of markets moving up during recessions and why people can't necessarily, okay, that's the 2004 or 2001, I'm sorry, why people shouldn't necessarily be afraid of recessions, but they should be afraid of stagflation.
And a lot of times you sell off in the beginning of a recession, or especially when you're selling off going into the recession, and then at some point before the recession's over, stocks bottom.
Yeah.
They don't, but you can't go, oh, recession just hit, stops, I just buy stocks. No, you're watching for a bottom. you don't wait till it's out of the recession to buy stocks. You wait. There's generally a substantial bottoming movement well in the midst of a recession. Just thought I'd share those interesting things with people. I always find stats interesting. That doesn't mean now why I'm also pointing this out is because we're closing below some key levels, so we could easily, with cycles rolling over, go negative into next week, and then between Christmas and New Year's, get a bounce. But it's not just, this is not the market to just randomly go into Monday in my book and just say, I'm buying and I'm waking up after January, or the first week of January, and just going away.
Great.
So, hey, how did this look? Now my comments are working again. See, but we're not in a recession. Wink, wink, waka, waka. I don't technically think we're in a recession yet.
George, I don't believe the June lows will hold. By the way, aren't the October lows the lows, or did I miss something here?
The October lows are the lows.
Yeah. So what June lows?
I don't believe the October lows will hold next year. It's just the timing.
Yeah,
this is the challenge with these kind of markets is long term it's easy. It's still bearish. Right. If you're trying to play shorter term swings, it went from bullish. Now it's barely, I put this at barely neutral. It could tip into a little bearish pullback unless we get the close below 37.55 or 56, whatever that level is, right around here. Then the probabilities shift. Until that, we have the thing. Even with the spiders triggering a double top today, which was on the sloppy variety because of all the hitches in there, is that a pullback that says we are going to new lows? Well, no. You could complete the double without shifting the probabilities to retest the low area from mid-October. Interesting enough.
Also won't stop me out before anybody asks.
What was that?
It won't stop me out also before anyone asks.
Bob, what happens if that double, it's triggered? Are you out yet, Bob? Did you not know when you said you were still long that a double just triggered?
You can trade around core positions, people.
You can't. That's what another thing that people go, are you long or short? Yes. What's your duration? Yes. How can you be long and short? Because you can have different duration of trades and different instruments on. And you can technically, within two separate accounts, be long and short.
Right.
It's the binary trading style of that's where, but most people are binary traders. They're either long or short. Right. How's oil looking?
Weak. To me, it looks weak.
We triggered a little double top today.
Yeah, I mean, we obviously recovered short term. We recovered up into the rotation zone. It's only the second time up there on a daily. Looks weak to me.
Yeah.
So we'll see next week if it stays weak. There's no triggered sale for me or anything, but Mike's little double maybe.
That was just see again. It's great for an aggressive. I said we got a % B buy earlier in the week, and as I listed out this morning, a great trailing level was if the double triggered at 8 a.m.
Yeah,
you can take it off against the rotation zone. The only thing that would get me long again on a very short-term basis would be a close above 78.37, and that would only be for a retest of the 50. So that would be a little micro swing trade / not long-term. Long-term, it's still down after hitting the second target area. Bob, dollar index triggered a % B buy today, reversal. What are your thoughts on the dollar?
Um, that's a good question. Look, if you believe what the market believes of the currencies, they believe that the Fed is going to ease off the brakes and that the ECB in the UK are going to get aggressive. I found it really interesting that the dollar rallied today while yield differentials again blew out between the US and Europe. So, but then came back in toward the end of the day. So, from that perspective, I'm not, I don't have really any strong feelings about the dollar either way, but it seems to me like the sell off is likely to continue in the short to medium term.
So we shall see. Because if the dollar does get a little hold again, and we get a multi-day rally in that, it could be negative for the equities too.
Right.
Any other thoughts? You all right? Any other thoughts on yields or bond market specifically in the USA?
Well, I mean, again, you look at kind of what's happening in the shape of the yield curve, and we got more inverted today again. I don't know if it held in toward the close,
It
but I
closed
had
it.
us going from 70. Go ahead,
It
please.
closed at roughly negative 79 basis points.
Yeah, that's where I have it right now. So, I mean, the largest inversion, we're not far from it. The largest settlement inversion was 84, only 5 basis points away from that. And again, when you have the 2 year and the 2 year up a basis point or so, and the 10 year down three, that implies that if the Fed is either going to work or the Fed's work is going to work, the Fed tightenings are going to work, or that the economy is going to slow dramatically. So, yeah, that's my stance on it. I mean, we've seen this now between. Oh, by the way, jobless claims continuing claims went up again today. That's another thing I wanted to bring up. So barely, by the way, like on a percentage basis, I think it was mildly unchanged, but you look at it from the actual release of the number, and it was a little bit higher than last week's revised higher number. When they have it in black like that, they consider it unchanged. Did they correct it to being exact?
Revised, continuing was revised 1K better.
Okay, and what is that in relation to what they show as the final number for today's release?
The final number they still have at 1671.
Yeah, so it was a little stronger again. That's 10 weeks in a row. 10 weeks in a row that it's higher, even though today was mildly higher. So take that and your inverted yield curve and stick it up your recession.
All right, but are you still long? I'm sorry.
That's all right.
It's it's almost like it's almost turning into an audio meme, you know? But are you still long, Bob?
Do you guys want to hear a dirty joke that I won't finish? Dirty? Are we done here? Because what I'll do is I'll hang up before I finish the joke so that the dirty part doesn't come out. You want to
All
hear it?
right, you start the joke.
All right. So a rich man and a poor man have the same anniversary, right? And says to the rich man, "What'd you get your wife this year?" He said, "I got her Mercedes and a big diamond ring." He goes, "Why'd you get her both?" He goes, "Well, this way, if she doesn't like the diamond ring, she could return it in the Mercedes and she's still happy." Right? Rich man says to the poor man, "What'd you get your wife?" He goes, "I got her a pair of slippers and a dildo." He goes, "Why'd you get her both?" He goes, "This way, if she doesn't like the pair of slippers, she can."
Oh boy. You know what? With that, with that, that sums it up, and there is your duck fall. The duck fell from the ceiling. Oh boy. That's the way to end a Thursday going into Triple Witching Friday. Got a question here. By the way, I am watching in the 10-2 yield curve. It's still early. I am keeping an eye on a potential. What would that be? Come on, what is it? An inverse Head and shoulders, but it's still early. It is still early. But I will be keeping my eye on it because we don't have a right shoulder yet. But doesn't it look pretty? We got a question about gold. If I missed any questions, they're working in my comments again, so I don't know what happened. Oh, finally, I'm not ignoring questions. It's just too much to jump around in too many screens. My feeble mind can't handle it. I was asked about the gap fill. We're still holding the rotation zone. But we break below that. So tomorrow, here's the way I like to trade these things. You break down to below today's low would be especially with momentum, would be a short-term short trigger for targeting the potential gap fill. We close below the daily. Let's say we don't do the gap fill, but we close below the daily. Then I look to hold it for the gap fill. All right. Especially with cycles near the top on the daily and rolling over on the weekly, because besides the gap fill, we could come back to the weekly rotation zone. So that's the way I like to take an intraday break into a potential swing trade. Swing trade. And I've covered that before with percent Bs. Just like the dollar index. Dollar index, again, had multiple reversals today. You see here, ECB press conference, and after, as that was winding down, you got dollar momentum. Dollar momentum breaking back above yesterday's high. Intraday break pattern, where then if it goes into a close, it can be held with then it transitions back to a break-even stop. So you got a little leeway. It's even hitting the rotation zone. Part of the position can be unwound and even then move to a break-even stop. If it continues up, the next key stop area for me is about 105.25, 105.20, where we'll meet the daily rotation zone. We start getting a close above 105.43, it could be potentially rolled into a bigger corrective pattern into the weekly rotation zone. That's the way you can combine an intraday into a swing trade, or even if you're not an intraday trader, use an intraday entry to try to get in a position at a better price. If it's not going to close and trigger the daily buy pattern, then the trade is over. Whether it's over for, whether you unwound a little and you just stop it out at break even, or you take a little minor loss, whatever it is, it's not triggered as a daily swing trade. So back to this real quick. Closing below the 50. Technical damage is done. Did not close below the 39.11.25. Cycles rolling over on the daily and the weekly. The only gotcha tomorrow is friggin' quad witching, which I hate. By the way, I did use these for the people trying to use the harmonics. We had the harmonics, a sell-off. We got the pause in the rotation zone. By the way, this is why you wait for the trigger. The trigger for this little potential double, it was confirmed but never triggered into the rotation zone, rotating down. Here's the way I use the harmonics. Next target area on the rotation down, 39.25 area. Pause there, then 39.17.75 there, and then my next level, which everybody knew about, was 39.11.25. That's how I got my levels for intraday today, in case you were wondering. For those trying to learn some harmonics. So, real quick, NASDAQ. We're not going to get to look at a ton of stuff today. NASDAQ did more technical damage from the sell-off. Lowest close now since CPI Thursday. The lower close, every lower close since the close at CPI Thursday, which was back on the 10th of November, over a month ago. But did not close below the key support the key support low from December 7th. So we have low closes, but not closing lower than the lows. So it's sort of like, if it was not OpX tomorrow, it would be an easier call. So if it breaks intraday lower, the trade is down tomorrow. Easily down tomorrow. Back to the S&P. The only thing I'm watching, we had a little mini double going into the close, so I'm watching for a retest of the lows once it reopens again. But your key resistance is now 39.37 on any bounce, and then we'll cover the rest tomorrow morning. The key levels lower. Let me go back to this key pausing bar. No, we don't have a double. The key minor level would be 38.79. The major, look at all this cluster in here. Breakout prior, resistance becoming support. 50% retracement from this up move and a reverse harmonic all in this area. Going into next week, this is going to be my target area because cycles are at the top. Unless we got some rip your face off rally tomorrow that literally closed above today's high, these are my targets for next week. For the NASDAQ, I already have the harmonics on there. 11,308 first level, and then we have the 62.5 and a harmonic projection. 11,180 to 11,193. Those are the targets for next week. The Dow, technical damage. Now the Dow, pretty much closing. What was the low? 33,452. 33,436. So technically did close below the lows. Technically did, and here's, there's your coming in with that harmonic area. I am watching for this to reconnect. 33,000 harmonic level roughly and the 50. I'm watching for a reconnection with that. The Dow's a little more challenging. Why is it a little more challenging? Because we have the reconnection with the 50. Then we have the 50% run up from before. Let me flip these harmonics around. Let me flip this around real quick just to see where we sit. Then we have a key prior harmonic level and the 200 at 32,425. So those are my two major downside targets. I would use the 37.5% harmonic for a stop reduction on a short level. But this is key. And then the 33,450 level. The Russell, short-term technical damage with the close below these lows and the lowest close since well below CPI, well below everything since the day before CPI Thursday. That's the only still thing holding it up, and nearly at the 50% retracement from here. My key line in the sand is about 1745. DAX, major damage in the DAX after this sell-off. So first I'm watching for a potential bounce at around the 50, and I think we will reconnect with the 200 again. We're now, looks like we may, unless it's a strong bounce tomorrow, close within the rotation zone on the weekly. So I'd be watching for a continued bigger pullbacks in the DAX. Notes, they're just ugly right now. I literally am ignoring them until we get a clearer pattern. Dollar index was already a % B buy, watching for a follow through in that. The VIX moving back up a little. But again, we got OPEX tomorrow. We already talked about crude. We already looked at gold. We had something on Google. Google on the short-term basis. Let me put up the short-term. Closing just above the 62.5 from here. But I'd really be focused with this for this gap fill play to the downside. The only thing, if we have some market strength, you will have a gap left to the upside, but I'd be watching for rollover plays in Google. Apple breaking the triangle and retesting the low area. If this starts breaking down, this would be very negative for the markets, at least for next week. With Apple retesting the key low area. So we're getting into triple bottom territory. Not that it's got some magical strong properties, but it slightly favors the continuation pattern. But everybody who bought these two key lows, if this starts breaking, we could easily see a retest of 130. Microsoft, I'm just pointing a couple things out. Microsoft still holding with the trigger of the double. You can see it here running down, hitting the first target, a little bounce. I'm still focused on lower prices with Microsoft, trying to barely cling on to the daily rotation zone. So there is a lot of stuff not looking so good. Amazon retesting some key lows. Also, if these I'd be putting in alerts on, even if you don't trade any of these stocks, I'd be putting in alerts. I know we had a request for TLT. As you see how much I look at just the bonds. I don't actually look at TLT that much. Because the futures trade a lot better. But you did have a double bottom there that rallied up. This is just a yuck, but I'd watch if it starts trading below about 106.35 for a correction starting, because right now you're between the 50 and the 62.5. And then I'd watch, that wouldn't be necessarily the new lows. I'd be watching for a pretty key pullback with cycles at the top on the TLT. But this needs to confirm something, and my confirming level would be if you get a close below this 106.25 area. Yes, there are some probabilities of continued from this candle. Let me get back there. You're talking about this candle closing in to the bottom. Yes, any candle, when you have a long wicked candle, let me just take this off for a second so we can neaten this up just a bit. On testing, whenever you have a long wicked candle that closes either in the top 25 or bottom 25, it is very significant as a turning candle. Yes, that was a good question. There are probabilities when you have a long wick, especially that's more than double the average ATR. That's a good way to look at it. Any candle that's more than double an average ATR is considered a long candle from my systematic testing point of view. And then if it ends either in the top or bottom 25% from the high to low, it is significant. That was a very good question. Oops. There we go. All right. Okay. Tesla, just a little bounce and gap fill. Even on a continued play with cycles at the bottom, I'm watching for a little, if there's any rally, for a rollover play. Remember, long term is still rollover plays, but nothing else there. Okay. I think that's about it for today. I have to literally jump now and deal with a bunch of stuff. So I will be back tomorrow morning for, unfortunately, the massive OpEx tomorrow. I will see everyone then. Thank you for tuning in. Bye for now.